What's going on, everyone? Welcome back to Courtside Financial. This is a brand new channel, so if you're new here and you want to be a part of it, make sure you hit that subscribe button, make sure you hit the like button. Those things really do help out the channel, and also I want to know what your thoughts are on NIO in the comments below. So if you've been keeping up with NIO stock in any way, shape, or form, you know that this stock has had a lot of volatility, and it's pretty much been a wild ride for shareholders and investors, as well as NIO, the company itself. My personal experience with NIO, I bought in last May, May 15th, which was, I believe my cost average was somewhere in the 470s range. And I continued to contribute to that position and continue averaging down through the lows, through the gains, just dollar cost averaging the stock. And when the stock was truly beaten up in like the twos, the ones, that's when I contributed more than I usually do. And with that being said, I was able to bring my cost basis down to I believe about $2.20, and I sold the stock at $4.70 in January, which left me with a huge profit in NIO stock. At that time, what I decided to do was stay on the sidelines and just kind of watch NIO stock. And eventually, a couple weeks ago, I bought in NIO at $3 and I sold my position at about $3.80, locking in profits. And now I'm here and I'm back to get in long term, and I'm going to explain to you guys my bullish case for NIO. NIO is currently trading at $4.04. At this time, it is 12:39 p.m. Eastern time, and what that means is that NIO stock is up about 18% for the past week. Now, there's a lot of reasons why the stock has been kind of climbing within this short time frame. The biggest reason right now is because the Bank of America analysts upgraded the stock by 47%. Analysts are just starting to catch on, and I believe that the stock is truly undervalued if you believe in the company and you believe in its long-term value. Now I'm going to talk about why I believe in the company. As we all know, the demand for electric vehicles is certainly going to increase over time. The NIO story can kind of be thought of as the Tesla story. Let's think about the cost of electric batteries. The cost to produce an electric car battery has dropped 87% from 2010 to 2019, from $1,100 per kilowatt hour to $156 per kilowatt hour. That's a huge change. With that, I believe that we're going to see a lot more car manufacturers producing electric cars because the cost has cut down so much. And that's also going to have an effect on the consumer side, because since the cost is lessening, that means that they will be more affordable for consumers. Not only is the cost to produce electric batteries consistently dropping and will probably continue to drop over time, now you also have to think about the other costs that are there when it comes to having a car. A lot of the big costs that are associated with cars are maintenance. When you think about internal combustion engines, there's a lot of problems that come with them. There's a lot of pieces and parts that are oftentimes breaking down and need repair and need service. When you think about electric vehicles, they're a lot easier to manufacture. There's less parts, there's less complications, meaning that there's less problems. Now, in terms of NIO and Tesla, it's pretty much like strapping a battery onto a frame as opposed to putting all these parts together. So that makes it more efficient because there's less things that are going to break down, there's less complications to be worried about, and there's less expense as cost of ownership. Now, you also have to think about how much money that you're going to save at the pump. Electric vehicles are saving you a ton of money at the pump as opposed to internal combustion engine vehicles, which gas prices are pretty cheap right now, but we don't expect them to stay that way. They will ramp up, and like I said, the battery cost is going down. The overall manufacturing costs are going down for electric cars, and not only that, but there have been times and situations when the government has offered subsidies or tax credits to those who own electric vehicles, not especially in China. So it's going to be this whole wave of disruption that over time eventually pushes everyone out of this market inefficiency of internal combustion engine cars to the more efficient thing to do, which is electric vehicles. A lot of the mistakes that people are making when it comes to talking about Tesla and talking about NIO is that people think that they can't mutually exist, which is completely incorrect. I expect that Tesla opening up their China factory will actually spur demand for NIO vehicles, because NIO is a competitor that comes in at cheaper price points than NIO, and then also the Chinese will have a sense of nationalism when it comes to supporting NIO, since it is a Chinese EV manufacturer as opposed to Tesla. And then the other thing is that the government is behind NIO. So first I want to take a look at the Model X, which is Tesla's flagship SUV at the time. And then I want to take a look at the ES6, which is a smaller version of NIO's ES8. So when you look at the Model X, if you wanted to get the cheapest version that Tesla has to offer, that would be their Long Range Plus. With that, you're going to get 351 miles of range on a full charge. You're going to be able to do 155 miles per hour top speed, and you're going to be able to go 0 to 60 in 4.4 seconds. Now I really want to talk about that 0 to 60 in 4.4 seconds. When you think about the typical consumer, the typical buyers of SUVs, they're not purchasing SUVs to kind of drive like it's NASCAR or anything, right? They're purchasing SUVs for the functionality and utility of it, as opposed to getting a smaller vehicle like a sedan or a coupe. They're purchasing it for practicality. It's a lot easier for families to have an SUV than to have a car. So I don't think that the 4.4 0 to 60 matters too much to the typical consumer of an SUV. Now, looking at the NIO ES6, what you can see here is that you're going to get 610 kilometers of range, which equates to 379 miles of range. 0 to 60 time, it actually says 0 to 100 kilometers of 4.7 seconds, which equates to 62 miles per hour. So from 0 to 62 miles in 4.7 seconds. So obviously this is slower than the Tesla, but like I said, when you think about the typical consumer of an SUV, no one is buying these to kind of go drive on the Autobahn per se and speed. People are buying these for practicality and utility. There are three options when it comes to purchasing an ES6. You have your signature edition, you have your performance version, and you have your sporty version. Let's just go with the signature edition and the performance version to keep things fair. If you went with the sporty version, which is a little bit slower, that would be $49,935. If you went with the performance version, that would be $55,514. So these are pretty much coming in at a way cheaper price than the Tesla Model X. So and like I said, the Tesla Model X from a performance standpoint is a better car, but not when it comes to range. And when you're buying an SUV, you're buying it for practicality. You're not buying it to drive as fast as you can. So what would you rather have? Would you rather be able to go a little bit faster in your SUV, or would you rather be able to have longer range and be able to recharge less? Now, I do think that Tesla's range is going to increase in the future, and I also think NIO's range is going to increase in the future. And I did say that Tesla is the bigger name. These two companies can coexist, and Tesla doing great things in China will ultimately drive demand for NIO. Now, why do I believe Tesla can drive demand for NIO? The NIO ES6 ranked #1 on Auto Home's latest vehicle quality report above names like the Lexus EX, the Ford Focus, the Mazda CX-4, and the Audi Q5. For the vehicle to rank number 1, this is proof that NIO is making a good product. And personally, not only is the product good, but I also think that the product looks good. We know that reliability is a huge driver of consumer purchase intentions and consumer demand in the automotive vehicle industry. So when you're making a reliable vehicle, I know for me personally, that's the first thing that I look for when it comes to purchasing a car. And I think this will make sense to a lot of other people. Who wants to keep on going to the mechanic? Who wants to worry about unwarranted vehicle expenses? Nobody. So this is a very big deal for NIO. They're making a solid product, and now the challenge becomes the business. What do I think NIO has to do? So NIO has a market cap of $4.2 billion and their annualized revenue sits somewhere around $1.5 billion. It's important to understand that the automotive industry is capital intensive. It requires large capital up front to remain sustainable. And the problem with NIO is they've been burning cash since they IPO'd. I was not one of the people to buy NIO at the IPO price. Like I said, I bought it last year at May because I'm just not a buyer of IPO. So with NIO's earnings report being tomorrow, Thursday, May 28th, what we want to see is growth. What we want to see is that they actually beat the earnings per shares estimate of negative 26 cents per share. I think that they'll beat that, but who knows? No one knows. NIO, if they want to survive, they're going to have to be able to scale and ramp up sales and create more demand. I don't think the product is the issue. I think it's all just going to be based on that. One of the things to note is that when NIO reported their Q1 sales, they actually grew by 13.1%. Now, if we look at Ford sales in China for Q1, they decreased by negative 44.9%. If we look at Volkswagen, they decreased by negative 52.7%. If we look at GM's Q1 vehicle sales, they dropped by 43%. Much like Tesla, this is pretty much looking like a lot of disruption is going to come forth in the auto industry, and it's going to favor those who are in positions to take advantage of it. I do want to talk about Tesla and NIO, and again, why they're in two completely separate places. NIO is seeking funding to survive. Tesla is seeking funding because they are supply constrained. I believe there's going to be a lot of demand for Teslas, but they aren't able to produce enough. That's why they gathered funding at the beginning of the year. NIO actually gathered funding to survive, and the government has showed us that they are behind NIO, and they are playing for keeps when it comes to electric vehicles. China might be the biggest power in electric vehicles. They have the biggest market for electric vehicles, and they're taking this very seriously. The government has given NIO $981 million, almost $1 billion in funding for a 24.1% stake in NIO, in the agreement to move NIO's operations to Hefei. Now, another thing that I want to hear in the earnings call is, how is this agreement going to affect U.S. shareholders with giving them access to that capital? This was one of the stipulations, but I do think the capital was much needed. It's going to give NIO a little bit of energy to do the things that they want to do and do the things that they need to do to stay afloat and continue to grow and continue to survive. I'm so bullish on NIO because the automotive industry is continuing to change. They are one of the players that are being extremely aggressive when it comes to ramping up sale, when it comes to trying to ramp up sales and trying to gain market share. And I believe that the demand for their products will be spurred by the demand for Tesla. who is at another level currently. My thoughts on the share price being under $5, if they can survive and they can continue to grow their numbers, then NIO is very undervalued at these prices. Now there are a lot of risk. I don't think that the Chinese government will let this company go bankrupt. There's a sense of nationalism. The Chinese want to be big in the automotive game. I believe that this is a company that can eventually go on for global expansion. But with all that being said, this is a speculative stock, and there's huge upside, believe that, but also believe that there's huge risk that come with investing in this equity. Whatever happens in the earnings call, whatever is said, could kind of be scary for U.S. investors, because NIO, Luckin Coffee was a case study of pretty much Chinese stocks that scared a lot of people away from investing in China. Now, with them taking this deal from the government, it's going to be interesting to see how that plays out, because a lot of these companies use shell companies in the Cayman Islands in order to be able to trade on the North American exchange. And with that, there isn't a lot of protection for us, not the same protections that we have when we invest in U.S. businesses. You think about how many times shareholders have actually filed lawsuits against particular companies as part of their protections as shareholders. Now, I don't think NIO, being what it could be for China, being the could possibly in the future be the staple of the automotive industry over there, would partake in such unethical actions when it comes to their books and their accounting practices. Good news is that the government is now inside of NIO, so will they let them fail is the question that we all need to ask ourselves. Not only that, but NIO has Intel, one of America's powerhouses of technology, as a partner to help squash any of the anti-Chinese rhetoric that's floating around, especially right now with a lot of talk about Chinese companies being delisted. Do I think NIO will be delisted? No, I think that there's going to be NIO stock will have its day, but that's just my opinion. None of this is investment advice. I look forward to seeing what happens after earnings and how that's going to affect the share price, but I'm not someone who's looking to swing trade NIO anymore. I've already made 2 profitable swing trades on it. I think it's been beaten up pretty badly in the past 2 years, and now I just want to figure out when it's going to be the right time for me to lock in a position and hold for the long term. I do want to understand more about the funding deal and how that's going to affect us first. And also, I want people to think about how many shares of the company Lee Bin owns. He is the CEO of NIO. My guess is that he would want to remain a billionaire as long as possible. So for him, it's in his best interest, and not only his best interest, but also the shareholders' interest, to continue to make sure that these shares continue to rise over the long term. In an interview that he did last year, he said that a lot of American investors are not seeing the long-term value of NIO, and that's kind of what made me do a deep dive on this company and look into it a lot more and be able to form my own opinion and ignore whatever else you see in the news.